Hey traders, welcome. So if you look at this chart here and it looks a bit unusual, that is because we are using Heikin-Ashi candlesticks on this chart. So in this video I'm going to talk a little bit about what is Heikin-Ashi, how it's calculated, and how we can use it as traders, that being the most important thing of the day. So okay, this is a Heikin-Ashi chart. What I'm going to do now is I'm going to split the charts up. I'm going to put side by side, and we'll put an Heikin-Ashi and we'll put a standard chart, and that looks like that's Bitcoin, so we'll change that to the Dow. So there's our Dow and our standard candlestick, and there's a Heikin-Ashi candlestick. Now you can start to notice the difference between the two. A Heikin-Ashi, you get a lot more candles that are the same kind of color. During trends you get a lot more difference in the way they look in terms of the tails and the wicks and that kind of thing. So let's have a look at how they're calculated, and then we can go back and see if we can find any way of using them in our own trading. So I found this really good kind of summary of how it's calculated, and it makes a lot of sense when you think about it. So they're structured in the same way as a candlestick. So you've got an open, high, low, close, as you have with a normal candle. So you've got the wick, you've got the tail, you've got the body, and it's colored accordingly. However, the Heikin-Ashi is slightly different. Now Heiken is average pace or something like that when you translate it from Japanese to English. I'll double check that. So the close here, as it says here, the Heikin-Ashi close is the average of the open, high, low, close for the current period. So that kind of makes a lot of sense, because instead of giving it more weighting to an actual pinpoint as you would normally get with a candlestick guide, just a point in time, the close is giving more of a weighted average over to the current period, which is good, and it makes sense, and you will see why this sort of comes into play in a moment. The open of the Heikin-Ashi is the average of the prior candlestick open plus the close of the prior Heikin-Ashi candlestick. So it's basically the midpoint of the previous Heikin-Ashi candle. And if you go and look at some of these, and what we'll do, let me just put that back onto full screen here. You can see that in play. So you know, there's the the close of that candle and the open of this candle here. I'm just looking at the green one, if you can see it. So the open's in the middle. So the open's always in the middle of the prior candle. So you can see that, you know, when we've got this sort of trend here, every time we open, it's right in the middle of the body of the candle. So that makes sense. Okay, let's move on. The high is the maximum of the 3 data points. So the current high, the current open, and the current close, it's the biggest of the 3. So in other words, whatever the largest number is, that is where the high is printed. Now most of the time that is going to be obviously the high of the day, but it's going to depend. Obviously, if you've gapped down from the prior day and the open is going to be higher, and then if you just, that's the high of the day, then that's going to be the high of the candlestick, the current Heikin-Ashi candlestick. Okay, so the and the low is literally the inverse of that. So it's the minimum of the low, the open, or the close. And again, you only get that situation if it's not the actual low, if you've got a gap situation. So how do we use it? Now we've got an idea that it's basically it's kind of giving us an average over at least a 2-day period, because it takes into account yesterday's trade to give us the opening print. It also takes into account yesterday's trade to give us the closing print. If we go back to the definitions and double check that, the close is the average of the prior open plus the close. So you're getting the average there, and then today the high and the low is obviously just the extreme. So what that does is it kind of smooths out any little wobbles that you might get in the chart. And what I'll do is, if we look at the chart here, we'll use the Dow as an example, and we'll stick up some more in a moment. You can see how when you get explosions off the low, this is a great time to sort of look at it. This period here back in November 2016, and we'll remember it very well, pushed up, and you can see just solid green. This whole section here is just pure solid green. But then if you flick that onto a normal candlestick, and we'll go back to that period in time back in November, you can see solid green, but of course you've got a lot of dotted red in there as well, but generally it's speaking, it's green. However, look how much more smoothed the candles are with the Heikin-Ashi. You know, it's literally green all the way up. And if you were to use a strategy where, hey, while the Heikin-Ashi is still coloring in my direction, I'm staying with the market, you would have been in let's say you took a signal that said, okay, I'm going to take a signal on a breakout. Let's not cherry pick stuff here too much. Let's say you're going to take a breakout here of the prior couple of months range, and you went long here. You're going to be holding it all the way through, and your exit's going to be right up here. So the point is, it gets you on board large trends. And if we look at this example here, so at the beginning of this year, when we had that good rally during February in the US markets, same kind of thing. It keeps you in the trade, and that's really, I feel, the best use of Heikin-Ashi. There are other strategies out there and other ways that people will use it, but it's kind of the best way of sticking with it. And also, if you look at something like a 15-minute chart, it comes into its own. Then let's actually now just flick over, because the time of day is the US isn't open. Let's just flick over to the DAX, and the reason I'm using that is because the US is just in a pre-market quotation there. So let's look at the DAX, for example. That's the regular candlestick. Now if we flick over to the Heikin-Ashi, you can see how when you get big chunks of move, then the Heikin-Ashi will stay one solid colour. So it's quite good at judging when the strength of the trend is still relatively strong. Of course, if you're still in a choppy environment, you're going to get them flicking from red to green, and like this example here, red to green much more frequently. But when you've got a strong trend, then that's obviously when you want to get involved as a trader in a strong trend, in the momentum to get on board that. You want to ride it for as long as possible. Then this is going to keep you on the right side of the market until things weaken. That's not necessarily saying it's definitely going to be a reversal there, but it is telling you, hey, it's not quite as strong. We've had a couple of periods now, depending on what the candle setting is, of weakness if you're looking at a Heikin-Ashi uptrend, or a couple of periods of strength if we're looking at a downtrend like this example here. It's just giving you the warning sign. So one way of doing it is to take your own original setup, whether that's double bottom, double top, breakout, whatever it may be. Then once you're in the trade, flick over to your Heikin-Ashi. So let's have a look at an example here. So in a 15-minute chart, you kind of sell the opening 15-minute range, which is here, 8 o'clock. That's the target here. You sell the breakout to the downside. A classic opening 15-minute range trade, guys. We're pretty familiar with that. Most of us are pretty familiar with that. And let's say we did that, we sold that there, and we went short around here, and I stopped somewhere midway through the range. We then flick to Heikin-Ashi and say, we don't really know where it's going to end. Let's have a flick over to and put them onto the Heikin-Ashi candles. Okay, here we are. We've gone short. Right now we're holding it, holding it. And there's our first exit here on the first green. We're coming out. So it's kept us in the trade when potentially we might have get chopped out. Now, okay, appreciate that doesn't happen all the time, but it's one way of looking at it. It makes sense because of how the Heikin-Ashi is structured, when it uses an average based on the previous action and the current action, and frames that in a candlestick and presents that in each time period that you're looking at. So something to explore a little bit further. I would always encourage going onto Google and just checking out other little things if that sort of sparks your interest. But I think they've got some use. And another great thing that's come out of Japan from the normal candlesticks, a little different flavour on it, and something that perhaps you can implement into your current trading strategy. Take care, guys.